So it takes us to mainland China. This is now our largest market and our fastest growing market. And we believe that it represents a significant opportunity for us to expand and grow our business. The certain important things about mainland China that make it unique as a market beyond just its size is government licensing. We're now licensed in over half of the provinces in mainland China, and that enables us to do with our direct selling business in most of the major populated cities in mainland China. The way we compensate our sales leaders is different. The way we utilize stores to facilitate both distribution of our products as well as to build our brand is also different. And we're also required to manufacture our product locally. So we have a set of manufacturing facilities that create the capacity to help us grow our business. Now, I just want to take a quick snapshot of just one of the segments we compete in China, and it's reflective of the overall market growth. But if you look at the health and beauty segment in mainland China, it's over $30 billion now, with the leaders who you would expect to be there, like P&G, L'Oreal, some of these other large consumer products companies who compete here. And the category's growth is about 11%. What's interesting is that the majority of that growth, that 11%, is coming from non-store retail sales. The two biggest segments in those non-store retail sales are internet and direct selling. So a lot of this growth is being driven by the segment that we compete in. If you look at where we are from a direct seller standpoint, these are government reported numbers from 2012. In 2012, we were the 13th largest direct selling company in mainland China. We fully anticipate that in 2013, when these same numbers are reported, that we'll bump up to number 5 or number 6, which is consistent actually with how we compete with some of these larger competitors, particularly Amway, around the world. We're typically in the top 5. In the case of Singapore, we are the number 1 direct seller. We tend to do well in markets where Amway does well. So we're happy with our results. We can see a lot of opportunity ahead of us as we continue to grow, but we like the way the business is developing in mainland China. But the question that a lot of people are asking is, why are you doing so well? Moving up in our ranking is important for our future growth, but we want to be able to explain why it's happening. And we would kind of focus on two things. One is improved brand awareness and favorability, so people knowing about who Nu Skin is and also having a positive association with our brand, and having strong trial and repeat. As I'll show you, our business is very effective at driving trial, but we also want to be able to make sure that we're building that sustainable, loyal consumer base through strong repeat. So I'm going to share with you a number of studies that we've done over the last year. We've made a big effort over the last 6 years to be more sophisticated in how we use our large and growing database to help us gain insight about how to execute the business. This was a customized study that we did in mainland China that looked at a lot of different things, but in particular around brand awareness. It replicated a study that we did in 2007, asking the question of an aided awareness question about which brands they had heard of. As you can see, in 2007, our aided brand awareness was 18% and roughly doubled in 2013, moving up to 35%, which we feel good about, but we also recognize that we have a long way to go, with our largest competitors being in the 90%. So we have initiatives in place to help us make that jump. The biggest component of how we spread our brand awareness, as you know, is through our sales leaders, who create a massive word-of-mouth campaign to drive that awareness. Secondly, and just as important, is not just do they know our brand, but how do they perceive our brand? So we ask the question across various attributes, which brands best exemplify these certain attributes? Nu Skin placed first among our largest direct selling competition for product quality, first for product efficacy tied to our age lock line and anti-aging, and first for product value. In other words, we're not the cheapest, but product value is measured by efficacy of the product for the price. We're seen as the best value. So 3 important measures where we've done extremely well. So let me talk about the 2-year business cycle and how that's working in mainland China. Again, our sales strategy is the same in mainland China as it is around the rest of the world, even though the operations differ, as I discussed early on. These are Greater China numbers, the way we provide these measures. But in Greater China, we went from 2010, which was the first regional LTO, where we did $26 million, to the most recent 2013 projection. We still have one more cycle in, we just finished one cycle in 2013. We're projected to be $340 million for Greater China. This, again, is being driven by the same thing that I mentioned earlier. The active base in Greater China is up 120%. So active base along with participation and the order volume drive that number. Same thing is true in Greater China. The actual orders per participant are down versus where they were last year. So the majority of the growth that you're seeing is coming through new actives coming in and growing that base, as well as sustaining and improving our participation rate. So the other thing that I mentioned earlier is this New Skin Expo. As I said, we've refined and perfected this system in China, and we've just been testing it, and now we're starting to expand it. In 2013, we hosted 15 New Skin Expos, again, taking place on a quarterly basis in 15 of our stores. And we had about 152,000 visitors to those expos, which was a significant increase over the previous year. 124,000 new consumers or customers came in as a result of these expos and generated around $150 million in sales, specifically related to these expos. So we're taking that 15 number across Greater China and increasing it to 25 expos. And as you'll see in the upcoming years, we'll continue to expand that and refine that process as we create these sub-cycles within our 2-year business cycle. Part of this is tied to our store expansion. As you can see, at the end of 2012, we had about 40 stores. We're investing and increasing that number by the end of 2014. We'll add another 36 stores, and we'll add another 85 stores by the end of 2016, and anticipate having roughly 160 stores by the end of 2016. It enables us to both spread our presence in mainland China and also to continue to execute these New Skin Expos. The last step, as I mentioned earlier, is recognizing success. One of the ways we do this is through these big gatherings. In Greater China, we call this annual. They have a success trip, but this is an annual trip, which is a recognition trip that they qualify for, called the New Skin Academy. We started this in 2008 with a core group of our leaders who qualified to be at this event. As you can see, there were around 800 people who participated in this first event. I'm doing this so you can kind of get an understanding of how the business is growing and how we're executing it. If you move to 2009, the same meeting executed in Macau was 1,200 participants. Moving forward, we had to get bigger rooms, started lining them up, in this case on escalators, 1,500 participants. In 2011, the number was 2,200 participants. In 2012, we changed it up a little bit and had them form the New Skin logo, if you can see that. And we had 3,000 participants. In this past September in Macau, we had over 5,000 participants. These are individuals who have qualified to be there at the event. These are the future leaders who will build their organizations in Greater China over the next year and make our regional LTOs even more effective than they were this year. We did something else this year as a part of our commitment to focus on our analytics. We hired NIELSEN, and specifically their advanced analytics group, to help us dissect exactly what was going on to drive this growth in Greater China, to allow us to express it in a very simple way, but also to gain the insights so that we could use them in other parts of the world and start expressing our results to you in some simple ways too. So there were two key insights that came out of this Nielsen study. The first has to do with penetration, again, that first objective that we have. What we've shown is that we've been able to consistently over each year improve our penetration rate. Now, what's exciting about this is in this current year, these periods that you're going to see are measured in 12 months ending in the second quarter. We'll annualize those once we get to the end of 2013. But in the most recent 12-month period, our penetration rate was less than 0.1%. So that means that in that year we penetrated less than 0.1% of the population of China where we do business. So we have a long runway ahead of us, but we've shown an effective way. We've shown that we're effective at driving trial, and I'll show you how that rate has increased. Now, trial is great, but really what we're trying to do as part of that second objective is convert that trial into an active, loyal consumer base. So the second part, or second big conclusion of this analysis they did is that our repeat purchases, so those who try and then purchase again, is also very healthy. In fact, improving sequentially for the last 3 years. And we compared our repeat rate to it's hard to get the data in China because Nielsen doesn't have the panel data, but we compared our repeat rate to other successful big launches that you would have heard of in the United States. And we were happy to see that our repeat rate is within the range and actually towards the upper end of the range in some cases of the repeat rates you see of some of the major consumer product launches in the United States. So both trial and repeat are healthy. What you can see on this chart is over time what these rates look like. So the red bar, the red dotted line on the bottom of this graph is reflective of the dollars that are coming from trial. You can see in 2012 we started to accelerate as our business cycle became increasingly effective. As we've increased trial, you can also see the repeat increasing in a very healthy way, at a healthy rate, actually starting in 2011, largely a function of introducing products into China that are extremely relevant and that building that growth factor as we bring in more triers and as our rate increases, the dollars that come from repeat purchases also increases. So a summary of the China research is brand awareness is improving, more than double what it was several years ago. Brand favorability is strong across the key measures that are important for us to create loyalty to a brand. Penetration is being driven by strong trial, and we anticipate that will continue as these 2-year business cycles are focused specifically on generating trial with these LTO product launches. And we've had sequential improvements in our repeat rate, suggesting a strong ongoing ability to build our base loyal consumers. So if you look at overall our sales and operations summary, business cycles have been extremely effective and are becoming even more effective as we refine the process of doing it and as we spread the best practices across the world. China continues to hold great promise. We're still at a very low penetration rate. Despite the strong growth, we think we have a lot of room to run there. And we anticipate continued global growth as we continue to focus on our awareness and brand favorability as we execute these 2-year business cycles and as we refine and expand the rest of our New Skin initiatives, including the New Skin Expo. Turn the time back over to Truman as he introduces Joe. Thank you.
I wanted to just touch on one point coming out of Dan's slides that I'm sure is a question that some of you will have. Recall the slide Dan showed of our LTO sales volume increasing from 17 million to 550 million this year with an increasing penetration rate from 5% of actives to 22% plus. He made the comment that our average spend per purchaser is lower in 2013 than it was previously, which is true. Now, some have wondered whether the rising size of LTOs is just because purchasers are purchasing more into the LTO. The point we're making is, no, that's not the case. They actually purchased less per purchaser in 2013 because we could only build $600 million worth of inventory. And so we had to allocate by market that inventory, and markets then had to allocate to their sales leaders. So we limited, essentially, what people were able to purchase in this year's LTO. And that's why the average spend per purchaser is lower. But the key point being that the beautiful thing about this is that, you know, our rising sales are not a result of people just spending more money individually. It's the number of participants purchasing in the LTO, a much healthier dynamic. I want to invite Joe now to come to the podium and explain why we're also confident that our product ammunition gives us lots of room to continue to grow here. Joe.